All right, so we are recording, so that's all good. Got Josh here today. Josh from Noomerik. How are you, Josh?
I'm doing well, Gary. How are you?
Awesome, mate. So look, thank you for joining us today, and we are going to have a little conversation about the awesome topic of payments and payment gateways and everybody's favorite stuff about like Stripe and setting up different payments and how do they work and what fees are we paying and why is Stripe painful and all those kind of things. So. I'll let you explain a bit about Numeric and where you came from, but just as a brief intro for you, Josh, you created Numeric a year and a half, 2 years ago, more than that
No,
even,
almost four now. Yeah,
4 years ago.
actually.
Sorry, mate. So it's
Yeah.
only a couple of years since I've known you. Um, but yeah, as an alternative to Stripe, that people can use because Stripe their fees can be high, and also Stripe can be a little bit painful with some of their what's the word I'm looking for?
Cancellation
Their
policies.
cancellation policies and their policies overall, basically, in the way that they work. So, um, do you want to give yourself a little bit of an intro, a little bit about Numeric, who you are, why Numeric was actually sort of born in the first place, and then we'll run through a few things about how Numeric can actually help agencies and why you might use Numeric instead of Stripe as an alternative.
Yeah. So thanks for having me. Um, I love talking about payments and I love telling people if you ever have insomnia, you should look up payment information and read over it and it'll put you right to sleep. Despite the fact that I love talking about it because it's a fascinating topic and what I've always found fascinating is it's one of the core components, of what you do. But really quickly before I jump into that, how I got into this. I came in, I've always been in marketing and sales, and I was helping another company with some marketing stuff, and I noticed high level. So in my world of marketing, I was helping this company. I was getting them back into a relative place of management for all their marketing materials. In that time frame, I found high level. So this would have been in 2019, right? 2020, when high level itself was getting started as a business, and it solved some really great problems for agencies. And so for me as a marketing person, it solved a lot of those problems. I got involved in the Facebook group and immediately started seeing people complaining about payments. And I was like, wow, that seems like it might be an opportunity, right? We have a tendency as entrepreneurs out there to try and create a product we think people need, and then people are like, I don't really need it. And so you can't make sales versus just identifying a real problem in the marketplace and trying to solve that pain. So that's really what I did. I kind of quite literally fell backwards into it, but have loved every second of doing what we're doing. And so now get back to the payment side of things. I've always found it fascinating, right? Like payments is a core component of what you do as a business, period. You could be the world's greatest marketer. You could have the best product under the sun, and you have one, right? Like your product flies off the shelf. Everybody loves it. It's raved about. But what happens if you can't take payment for that product? It doesn't matter how good your marketing is. It doesn't matter how good your team is. It doesn't matter how fast you can answer an email, put AI in place. None of that matters if you
Mm.
can't get paid. And so that was the initial crux of the problem was people were losing the ability to get paid. And so I was like, seems like somebody should probably build something, might as well be me. And so I got started building the software to replace Stripe and high level. And Stripe kept kicking people off and kept kicking people off, and they were changing their policies, and that was kicking people off. And then all of a sudden, people are like, "How much am I really paying?" And so that's really the genesis of how we got started was people were looking to solve two of those pain points. The hey, I can't get paid anymore because Stripe kicked me off. And I'm tired of paying the high cost of it. So if I talked to them about Stripe removing them, I would introduce a lower cost as well. And at that point, they didn't really care. They're like, charge me whatever you want to charge me. I just need to take payment.
Yeah.
And so, we started introducing this concept of dual pricing in the high level and the digital community, really, because nobody was out there doing it. It actually exists in the US in a number of places, and people, once they see it, recognize what I'm talking about. But until I explain it, They weren't really sure what it was. And then that became a game changer for folks
Wait,
because we were saying,
just explain what dual pricing is, Josh, for people
yeah,
that don't know it. Because I was looking this up yesterday, just did a little bit of prep for this, and then I saw one of the features of Numeric, which I didn't actually know about because we're talking to you about changing over to you because of fees and stuff like that. And you and I have had some conversations about that. And then I was looking through and I was like, oh, dual pricing, and I didn't actually realize what that was and what a benefit that could be. So, yeah, just explain what that is for people that wouldn't even know.
yeah, dual pricing is literally two price points for every product. So what I mean by that is you have a credit card price point and then some other vehicle to take payment. In the US, we use check or what people will say ACH, right? Basically a bank to bank transfer. I have my clients are able to create two price points for one single product. And so when the customer is checking out on the payment form or the invoice or the text to pay link, whatever it is, the end customer has a choice. Do I want to pay by credit card at this price or ACH at this price? The credit card price is slightly higher. And what that does is it essentially passes on the credit card fee that the merchant used to pay, right? What Stripe is charging.
Mm.
It's passing that on, but the customer is well aware of what's going on because you've given them two choices. And typically, human behavior will choose one what's best for them in that moment, always. And the second piece is they're going to choose based upon their buying patterns. And most people are buying on credit cards these days because they're rewarded so well by their credit card company, right? Like I've got a Delta Platinum Sky Miles card. I was going to book, I'll give you a quick example. I'm booking a car because I'm going to Houston in a couple of days. Instead of booking the car on Expedia, I book it through Delta and I get more miles. So it's a motivator for the end customer to use that point system, whatever it is, whether it's cash back or, a rewards program. So if I offer somebody dual pricing on a checkout form, more than likely they're going to still choose credit card. It's convenient. They get the reward points, but I've also given them a choice not to pay by credit card. They're just going to do it out of habit, convenience, protection, right? And so that's what dual pricing is. Two price points for every single product. Make
I
sense?
yeah, it makes sense, and I think it's not uncommon these days as well that people actually are used to, in a lot of cases, having the credit card fee passed on. Because so often, like you go into just a regular shop, a restaurant, whatever it might be. I don't know how this works exactly in the States, but so often here, you go to swipe and they just have a little sticker or something on their credit card machine that says, Visa, whatever, charge, excess charge
Yep.
of 1.9% generally, something like that on top
Yep.
of your fee. And you just know that when you're paying it, you're going to get that fee for the credit card charged on top of your, $100 or whatever it is that you're buying as well. You're going to pay an extra 1.9% on top of that. So people they're fairly accustomed to having the fee passed on to them.
Yeah. Not only are they accustomed to it, but if done the right way. So the next question typically is like, I can't pass on the fees, right? And I'm not I don't want to be too glib or tongue in cheek here, but that's the reality. When I have this conversation with folks as business owners, their first initial thought is apprehension. Oh, I don't know if I
Mm.
could do that, right? Because you say passing on the fees, and people they just get anxious about it. I can tell you the data doesn't lie. And the customer, when presented properly with the pricing, they don't care. So in a low ticket amount, it ends up being a dollars and cents thing, right? The customer's like, whatever, it's an extra couple of bucks on the purchase. In a high ticket amount, because we've got plastic surgeons that use us, LASIK surgeons that use us, high ticket coaches that use us, as long as you present the sale with the credit card price first, which is what the law recommends and wants people to do in terms of running their business and doing payments, again, specifically for the US in this example, then the customer doesn't care because once they go to check out, they already know the total price that they're possibly going to pay. It's not going to go up from there. It's only
Mm.
going to go down from there. So yeah, they're totally accustomed to it. I don't know how it is in Australia, but in the US, right, we have cash or credit at the gas pump, right, at the fueling station. So it's like if you're going to put gas in your car, Is it petrol in Australia? I've never been there. I gotta go.
Yeah, petrol, diesel. Yeah, we
Petrol.
don't call it. Well,
Yeah.
actually, we
So if you're
have
gonna
gas
put,
as well. Like gas is actual gas as LPG. So you got. I don't know if you have that in the
okay.
States. Like we have LPG, petrol, and diesel.
Yeah, natural liquefied natural gas.
Yeah,
Yeah. Anyways, so in the US, it's the cash or credit example I typically tell people, right? Whatever's displayed as you're driving past the gas station is the credit card price. Most people just want to pay at the pump and move along with their life. And they're like, oh, it's a smaller dollar amount. Not over a year of filling up your car, it isn't.
yeah,
Like you're just so your point is correct. People are totally accustomed to it. It's just part of what they do and how they operate their life because at the end of the day, if they already know they're going to be buying that product and they already know they want the airline miles, then they're going to be skewed in the direction of just racking up miles so they can go on a vacation. My wife and I went to Europe for 8 days a month ago on points. So it's just it's human behavior these days. In fact, it's so much human behavior I can tell you that 98% of people, even when presented with the lower price by paying by check or ACH, they will still choose the credit card price.
yeah,
It's just built into them.
yeah.
So,
Makes a lot of sense, Matt. So let's kind of dive into a little bit about, why Numeric, and you sort of mentioned why it was born out of people's frustration with Stripe having accounts cancelled. There's other issues with Stripe too, where like their policies, and I know this happened to a good friend of mine where Stripe suddenly deemed their account high risk, even though they didn't have a lot of violations or complaints against them. It was purely like the volume that they were doing through their agency. The Stripe suddenly decided that they were going to retain 20 or 25% of their funds every
yeah,
month, just in case, which
just in
wasn't
case.
which wasn't, weren't too happy about that. So what is it about Stripe? Like, why do they cancel accounts? What is it about their policies that they're kind of looking at and causing challenges for businesses and agencies?
Yeah, so it's a great question. So all payments, doesn't matter if it's Stripe or me or somebody else, are based on risk. There's a factor of risk, right? So let me explain. If you have a credit card and you have a $10,000 limit, you can go out and spend $10,000 on that, right? And then you've got to make a payment on that. And the credit card company that issued you that card is taking a risk on essentially lending you that money and that you'll repay it, right? For a merchant, it's double that amount. So if I have as a merchant am given approval for charging $10,000 for those sales, then the bank is actually exposed to $20,000. So here's how that works. On you as a regular consumer, they're exposed for the 10, right? You go out, you spend it up, you never pay them back. They're out 10,000. They transfer that money to those business owners that you bought products and services from, right? Now they got to come collect from you. But for a merchant, if I sell $10,000 worth of stuff, I take that money, it comes into my bank account, I split with it, right? This is
Mm,
obviously the worst case scenario. So now I've walked away from the business and $10,000. The bank is out, the bank that let me take those credit card payments, and there's a bank behind Stripe, and I'll explain that. The bank that let me take out that transferred that 10,000 from all those sales to me is out. The 10,000 they sent to me because I took it out of the account and walked away from it, right? And it's got to refund everybody that didn't get their products or services. So they're out 10 to me for paying me, and they got to refund all those customers because they've got fraud protection for the customers on the card and so on and so forth. So the risk is double exposure in that regard. So every bank or every payment company has some type of risk exposure. Initially, Stripe was building their business around these digital products and services. And somewhere along the line, in the last, I would say 18 months to 3 years, they started just simply shifting their policy. They were looking for businesses that were lower risk in-person sales, right? A restaurant where you serve food, get a Snickers bar, buy a coffee cup, right? That becomes much lower risk because it's a lower dollar amount and it's a product that gets delivered, right? It's easy to prove that that actually happened versus in a digital environment where somebody might sell a website. Yeah, you could say the website's up, but in the contract, did you agree to every word that's on the website, every picture, every so there's so much gray area in a
yeah,
digital product that the risk goes up. And so what happened was Stripe started changing their policies because what is called their sponsor bank, that's the bank that lets them run their business and just give out accounts to whoever they want to give them out to. There started to be this pattern, right? So chargebacks over an entire portfolio started going up, the risk starts going up. And when the risk starts going up, then profits start going down, and they're essentially making a business decision. In payments, you have low, moderate, and high risk banks who are looking for that type of business. So the difference between a Stripe and a Noomerik or a PayPal or a Square, and the PayPal, Stripe, and Square are all essentially the same in terms of their business model. They're what are called a payment facilitator. They have their main merchant account and then they just subdivide it to the nth degree, right? And infinitely they subdivide it, and they're still asking for the same information that I asked for. They're just doing it on a form and they're taking the risk. So the difference is I'm working with banks. I have banking partners that want high risk businesses. They will fully underwrite. This is all the fun stuff that people don't know about in payments, right? Where I'm like, hey, just look up payment info and you'll go right to sleep. These sponsor banks want high risk businesses. They'll fully underwrite you as a business owner or me as a business owner versus a portfolio of businesses who just come in through a form. Does that make sense?
Yeah.
So when that risk goes up and it's not really in alignment with where Stripe is headed in terms of a business model, then they're simply looking at different parts of their portfolio and going, that's too high risk for us moving forward. We're going to shut that down. Or we're okay with that risk a little bit, but we're going to increase the reserve amount to protect ourselves.
Yeah.
Because in the example I gave you where the bank is out double, Stripe is actually on the hook for that money too. So in that example, they're just trying to protect themselves from somebody that looks risky. So if your sales shoot through the roof, that looks risky. It's a great thing as a business owner to have sales go through the roof, but I can tell you, and you may know people on your own, sometimes fulfillment lacks when sales go through the roof because all of a sudden your team's not quite as big enough to fulfill. You've got all these kind of challenges. It's just a natural flow of business. So if you go from 10,000 in sales a month and you're helping 10 people to 100,000 sales in a month and you're helping 100 people, the workload for you got bigger, right? And so the risk therefore goes up and so on. That's really what's happening.
So what's really different about Numeric versus Stripe and PayPal and Square, and how the risk is managed between those underwriters? Would that be the right term? So the underwriters for Numeric versus Stripe and PayPal and Square, the guys that everybody would know.
Yeah, it's a good question. It's actually the back end infrastructure. It's the sponsor bank. So in payments, you have sponsor banks. You have acquire sponsor bank and acquiring bank are sort of one and the same. You have an issuing bank. Issuing bank is you, right? MasterCard sends you a credit card. They issued you that card. Acquiring banks is for the business side. The difference is that risk level. So Stripe, their sponsor bank is Wells Fargo, and they just are lower risk. They want in-person services and sales. They want stuff delivered. That's the direction they're headed in. Whereas in my case, the sponsor banks are high risk. They're totally okay with digital services, coaches, consultants. And this has been around for decades. It's not anything new in terms of sponsor banks and low risk and high risk. It's just what it is. So that's the biggest difference. The other difference is the way we set up the account can be for dual pricing. It could be for interchange plus. What Stripe does is what's called flat rate pricing. So they're starting you out at a flat rate, and that is the lowest it will ever go. And they're doing that for a very particular reason. And then, as I illustrated with you earlier, you're paying more than the standard rate that they advertise, right? They're adding cost in there to build their margin up a little bit over time based upon the other services that they're providing. So those are the biggest differences. Stripe is a sort of they want to be a one size fits all in terms of how they onboard you because they can onboard thousands and thousands a day, but then they're going to weed it out. I typically will refer to them as like the American Idol of payments. It's like everybody come on board, you try out with us, you sing your song, and if we like it, we'll keep you. And if we don't, then we'll wish you luck on your way. Whereas with us, we're looking at you as the individual. and as the individual business owner in the individual business. And so you actually have a set of eyes looking at your application, for the lack of a better term, to get your account approved. That's the biggest difference.
Yeah, so it's interesting, like you're saying. So with those bigger players, so to speak, or the mainstream, the Stripes and the PayPal, so they've got lower risk tolerance, but they're charging higher fees. Whereas you're working
Mhm.
with underwriters that have got a higher risk tolerance, but you can still get lower fees.
That's a strategy thing, right? That's the dual
Yeah.
pricing strategy. So this goes back to in the beginning what I was kind of sharing is, people will spend any amount of time building a website, right? They'll get AI now. That's the big thing. They'll spend weeks and weeks and weeks training a bot, but they won't put any thought to taking payment or the strategy behind taking payment. They'll literally hit that easy button and go, well, Stripe only takes 5 minutes. I'm just going to do that. The reality is Stripe's watching you the whole way, the same way our bank watches you. They just have made that initial part really nice. They're saying, hey, five, six, seven pieces of information in 5 minutes, we can have you up taking payments. What they're not really saying to you up front, especially on a new account, is the first payout's going to take 7 to 10 business days, right? You're going to really need to submit some more information to us. We've got a few more questions for you. They're just doing that over time. So they're sort of, I'm just going to use the analogy, maybe not the best one. It's sort of like try our drug for free.
It's like
And
the
then
low
if you
ticket
really
sale.
like it, yeah, right. Just come back, just take a little sample. Hey, I took a payment in 5 seconds. I just created a product and I created a payment thing. And in 5 seconds, I got paid.
Yeah.
There's still a process that's happening on the background. I've timed it. If you were to start today with Stripe and today with me, I'm going to pay you out faster the first time around, and I'm going to be more stable long term and less cost. But yeah, it's payment strategy. So that's really what I try to have people understand is there is an actual strategy to how you get paid in your business. You don't have to just hit the easy button. If you'll spend a little bit of time with somebody like me up front, then long term, I'm not going to be as fast. You're not going to take payments in 5 minutes, right? But long term, you're going to be much better shape, much better shape.
Yeah, so we were talking about earlier because like I've been talking to you for a good while about changing to Numeric, and then there's been some delays basically because you had to get regulation banking in Australia and all that kind of stuff. So we're looking at all that
Yep.
stuff with you now, and then looking at how much we could actually save, and then it's different in Australia compared to what you could save clients in the US because you've got different banks and different regulations and all those kind of things. So how do people figure out, is there a typical amount that people can say, oh, well, if I'm paying 3% with Stripe, or their mark rate of, I mean, it's like 2.9% plus 50 cents per transaction or whatever it is, basically. How do we figure out how much I can save on my payment costs if I'm with Stripe versus, or Stripe or PayPal, whatever, versus Numeric?
Yeah. So you asked me if I had anything to display. Actually, I'm going to show you. It's pretty simple. I'm going to show you how I do it, and I show people, but then I'm going to show you just how to do the math. So if I can share my screen here real quick.
Okay, should let you, I
Yep,
think.
I can. So this is what I show people who come to me looking for maybe making a switch. This is a little calculator. Just some notes about this calculator. This is I told you before, right? 98% of people will still pay by credit card, 2% by check. This does a 90-10 split, or what some people might call a 90-10 blend. So that's that. This takes into account the standard flat rate of 2.9% and 30 cents a transaction on Stripe. I shared with you, you're paying a little bit more than that right now. Sometimes I'll run into people that are paying 4, 5, 6, 7% on Stripe. They just don't know it. So there's just some standards here that I'm working with. But I would generally say to anybody, if you're doing, let's just do like $25,000 a month and you're selling like a $297 average product a month. This is my actual cost. Like this is what you would pay to use the numeric system to take payments instead of this, right? So now you've got savings here. I generally will tell people anybody really over $10,000 a month, you're going to save money. Um, Now, how do you figure that out? Just figure it at 3%. Whatever you're charging or whatever you're selling every month, times that by 3%. And then you can kind of get into the details here, but anything in that range, like I'm just significantly less. I tell people to use about 1% or less. If you start getting into the $50,000 a month range, just mathematically speaking, so 144. So let's just watch this real quick. 144 divided by 50,000. Like I'm 0.2%. I'm almost 0.30%. So it becomes significant, right?
Yeah, it's a
So
fair bit over
take
the
a look at your
year.
total. What's that?
That's a fair bit over the year. Look at like as you add that up, your average saving over the year, I can see that one there like 16K.
Yep. Yeah, I've across my entire portfolio, most of my clients are averaging somewhere around $1,500 a month in savings. US based, I got to be very clear about that. Outside of the US, we can serve Australia, New Zealand, Canada. It's going to be 20 to 30% savings over Stripe, so it can still be a decent chunk of money that you can save, especially if you look at it over the year.
Hmm. Yeah, that's
But
pretty
that's how
good.
I look at it.
So if people go there, so that's numeric.com/calculate page. I'm assuming you can, if you just go to numeric.com, you can get to that from the homepage somewhere or other.
Yeah, you can also just go to savings. I don't know why, like again, I'm not a website builder, so when I put in the domains, it kicks this out. You can find it from the homepage right here, calculate savings.
Beautiful.
So
So
yeah,
that would be the
just
best thing for people to go and have a quick look and just go, just put in what's your monthly sales volume, average sale. That's the only two
mhm.
figures you need, right? And then it can give you some kind of indicative. And Josh, I think people should know this as well. Like you are very straightforward and very upfront with this. Like you will go through this with people and really look at their numbers and work it out and tell them how much they can save. So this is indicative, all right? This isn't the hey, this
Yeah,
is the guaranteed number. This is indicative, mostly based on the US, different for different countries. We've had a conversation about that. Like this would be about a third of these numbers, roughly, for Australia, give or take, because it's about
yep,
25% you can save in Australia. So we know that. So it's kind of indicative, but it's a great place to start. And if you look at this and then you can still save a good amount. Like we've looked at this for Australia, we would still save a good amount every year when we switch over to you guys. So yeah, that's a great little tool there for people. Um, so we go back to Stripe for a second, right? So
yep,
these are the things with Stripe that why people have problems, right? Is that they get payments fail, they block their accounts. What is it about Stripe, like why payments fail, and what's going on in the back end there? Is this all? I mean, we've talked about it already. So is this around their risk tolerance? Because we see this now and again in our current Stripe account, right? We get ours is pretty good. Like we actually have a pretty low um, failure rate in terms of chargebacks and all those kind of things. We don't have a lot of issues with high risk payments and stuff like that. I think we've only had five or so ever.
yeah.
But is this all around the tolerance and stuff of Stripe, and they will see how many chargebacks you've had, payment failures, those kind of things, and they'll evaluate
Yeah.
you from there?
So failure, you're talking about people that just dispute the charge, meaning they asked for a refund or even didn't ask for a refund, and they're just saying to their credit card company, "I don't want to make I didn't authorize this," right? So chargebacks, or to use your term, a failed payment. I just so you know, I would term a failed payment like it just didn't go through. But a chargeback, right, is just a dispute of the service or the product or whatever. Stripe has quite literally said to people I know, like as friends, if you get to 1%, you're committing fraud and we'll shut you down. That's a pretty harsh statement to make because the bigger you get as a business, the more likelihood the statistics are just going to work out that you might run into a problem.
Mm,
It happens, right? Even Amazon has distribution problems. It's not uncommon for somebody to not be able to deliver on a product the bigger they get. And if they grow quickly, then you could run into what we've talked about, right? Which is delivery issues. So then if that happens and you start seeing these chargebacks, it's not that you're intentionally trying to defraud somebody. You ran up against a challenge that you're trying to actively fix. Stripe doesn't typically care. You're such a small fish in their sea. It's like If you go from 20,000 to 100,000, it makes no dent in their business.
Mm.
And again, I don't mean to sound harsh, and I'm not throwing Stripe under the bus. They clearly have a product that works, right? Obviously, they're worth $50 billion. Obviously, Stripe works. What I'm suggesting, and the answer to your question is if you if you run into an issue and you can't solve it fast enough, and you can't get people to not charge back, and they just get frustrated and upset with you and they just charge back, that's it. You're over. Stripe will shut you down. You're done. They're just not interested in dealing with that level of risk because it puts them at risk, right? It puts their business at exposure. On our end, it's different. I've had clients run 5%, 10% chargeback consistently as they've grown their business. They get better and better at it. So then the chargebacks go back down over time. But the bank doesn't immediately just go, well, you're fraudulent. We're going to shut you down. There's an obvious pattern to how businesses grow. They grow. Sometimes they run into problems. Sometimes they don't. If they do run into problems, what are you doing to resolve that problem? On our end, the bank would rather have a conversation with you that we help facilitate and just understand what's going on. Like, what happened? Did you sell way too much? Did a marketing campaign work so well that all of a sudden all this money came through the door and now you've got to now fulfill? Can you do it? Right?
Yeah.
Stripe just doesn't,
They don't care. It's like
they don't
Google.
care.
It's like
Yeah, it's like you're just
they're
like,
too big and you're too small.
I'm not a Stripe hater in any way, shape, or form, and I'm not a fear person in any way, shape, or form. But let's look at the entirety of high level as an example. There's something like 100,000 people that are paying high level for a 97 to 497 plan, right? And then on the back end, there's something like 2 million sub accounts, right? People are running businesses through them. The entirety of that volume, right? What that payment volume might be. You can make some assumptions on what's going through a high level shared. It's something like $250 million a month or something like that going through the entire system. Not necessarily that Stripe's processing it, but let's just use that math. If you compare that to the fact that Stripe did $450 billion in sales in 2023, I think. I don't think the 2024 numbers are out just yet. It's just a blip. It's like 1% of their total business model. Now, the bigger high level gets, the more obviously, the money's going to run through it. But if you're a business owner and you had a problem with 1% of your sales, you probably aren't that concerned about whether or not you lose 1% of your sales. And it's just a business decision. That's it. It's not like they don't like people. Clearly, they have people that work for them, and we're all human. So,
Yeah.
yeah, it doesn't work for them anymore.
Yeah.
So they shut it
Size
down.
size and scale thing, right? They just
Yeah,
it's it's that funny thing where it's like I mean we have this with people they like we're still a very small company. We're very connected with our clients. Like we do great support. We'll get people, they can come on a Zoom, they can book a call, they can talk to me, they can talk to Carlos. We have group calls, we have all kinds of stuff and ways that people can reach out to us. And then we'll get people that will they're the odd person, right? They will complain and go, I've got an issue, I want to speak to someone right now. And it's like,
yeah,
no, we have all this stuff. We have live support on our website. If they can't help you, they'll escalate it to the dev team, or you can escalate and get onto a Zoom call. And they're like, but I want to talk to someone right now. I'm like, you go try talking to Google right now. Like they're a
yeah,
multi-billion dollar company. They're not even going to talk to you in a week. Like you send them an
yeah.
email, you'll be lucky if you get a reply in a week. And it's like that expectation of people versus what the companies are. And again, they just like the bigger
It's not that they
companies, they
don't
just
want to
don't.
help, right? Same with you. It's not that you don't want to help somebody. It's just like
Yeah,
sometimes
yeah.
it's
We,
just it
we,
is what it is.
It is what it is, and you don't have capacity to jump on a phone call right now, but we will talk. Yeah, you can book a Zoom call. We'll get on there with you tomorrow. We'll help you immediately the best that we can now via text or whatever it is. But yeah, the big companies are just like, yeah, whatever. Don't worry about it. If they'll just ignore you. They don't care. They'll move on to the next one. They don't care at
Yep,
all. Size and scale, which is
yep.
yeah, challenging for
Yeah.
people, right?
It's challenging for any business. Anybody that's watching this, the bigger you get, the more it gets introduced into the complexity of your business. Even if you're, even if you're a high level person and you're running a SaaS program and you've got all of your onboarding done, right? And you've got any number of people built in to help support, it's still possible for you to run into a bug for a workflow to not work, for an AI bot to not work. It's still possible for that stuff to happen. And again, the bigger you get, the more complex it gets. If you just start adding hundreds of people to your overall customer portfolio, what happens if they all have a question on day one? You could
Mm.
have the best support on the planet, and if they run into that same person who's like, I need help now, and they can't get it, what happens if 20% of them all of a sudden are like, this isn't worth it for me? They file a chargeback and you're done. It happens. And so, would you rather have somebody that wants to work with you and help you through that struggle, or somebody who's like, you know what, it's not worth it to us. We're just going to shut you down in 2 weeks. Good luck to you.
Yeah.
It's kind of how you have to look at it.
Yeah, absolutely, mate. So, all right. Well, I think I've kind of gone through all the questions I have here. I think we have a good understanding of like, I mean, there's just a big difference in terms of like, it's the risk tolerance of those banks underwriting those, the ones that you guys have got, and then the level of care and understanding you have between the way the businesses grow and kind of looking at that and going, okay, well, this is where you are in your journey as a business, and then we'll work with you. So that's how you guys have kind of made that difference. So I guess if people want to get a start, we'll make sure we put the link to that calculator. So if you're watching
Yeah.
this, there'll be a link to that calculator below. So we'll pop that in. Is there another way for people to get started? I mean, is that a good thing for them just to go there, do that? I think there's a way that they can contact you under there
You
or
can,
have a chat with
yeah,
yourself.
you can reach out to us through Facebook actually, and then we've got a team that responds to those. We also have AI, so if the AI gets a hold of it before our team can get to you, just be aware of that. But yeah, if you just go to our website, you can chat with us. Again, the AI may pick it up, or a live person may pick it up, just depending upon the time of day and our load of people. We tend to see an influx after these podcasts that we're very grateful for. So yeah, just go to Noomerik.com. You can reach out through that, or you can go to Facebook.com/Noomerik. And you can get a hold of us that way.
Perfect, mate. Yeah, we'll make sure the links are wherever this is, the tubes of you, Facebook, whatever, the link will be somewhere with this. And yeah, I think people should just have a chat to you anyway, because I really appreciate your honesty around it. Like we look at things and then you explain, and you know, your love for payment gateways is to be commended, mate. Not many people are going to go through and read all that stuff, mate. So
It's yeah, I mean I'm a creative. I'm not a you've got all these personality types. I would consider myself a creative type of person. I didn't picture for myself getting into I don't write the code, but I got a team that writes code, right? I didn't picture myself getting into all those details, specifically to the level of detail that we have to get into with payments.
mm,
So yeah, it's and I really, really enjoy it. I suppose I enjoy this aspect of it more and talking with clients and so on and so forth. But the doing our best to break down the complexity of payments the way Stripe has, but on a more cost effective and a more stable environment has been quite enjoyable. And that sentence alone should put somebody to sleep.
well, I share the sentiments, mate, because we're kind of, yeah, we're in very different fields at the end of the day, but we're the same. Like we like problem solving, and we've got
Yeah.
all these clients that have got like ATP issues, problems with SMS, all that. So we're kind of helping those people, and I love that problem solving. And then the people that've been shut down, they come to us, they're like, oh, I can't get SMS working anymore with ATP. They've shut me down. Like, cool, here you go, get an account with us. You'll get set up
Yeah,
and
you've
back up
really
and running again
solved a
anyway. So.
huge problem. I mean, like I said, I only hear good things, really. I only hear good things about what you guys have solved for. So yeah, we're both problem solvers, and that's the fun part of it for me.
Yeah, I think we're all trying to do the best we can, and I really like that. And you're doing the same thing. It's like it's hard now for people to run a small, small or even medium-sized business, whatever. Like it is challenging. The red tape, the things that people have to go through, the forms
Yeah,
you have to fill, like they're not making things easy for people at all. Like
no,
it's not easy to run your own business these days, right? They're
no,
challenging. So
yeah,
yeah, let's make these things easier for people with their payments, their SMSs. What else can we do? Obviously, high levels doing great things. Awesome tool. Everybody should be using that. Yeah, let's make it better for people to actually be able to run their business and not have all these red tape, headaches, all of that stuff going on. Power to
yeah.
the people, Matt. That's what we do. All right. Awesome, Josh. Look, thank you so much, mate. Thank you for taking the time to come on today. It's been
Yeah,
awesome
thank
to chat
you.
to you, mate.
Yeah, thank you. Appreciate it.